Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 17th, 2022. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. Truly, the likes, especially the likes, is what keeps this channel going, and also it helps to increase my ratings so more people can benefit from this video. So please just hit the like button. It's not gonna take you that long. Today we're gonna talk about many different commodities, but we will start with stocks, as stocks make a new low for the third week in a row. I think there's a good chance now that we will see at least a somewhat of a bounce. I think junk debt is signaling that we will have a bounce in the weeks ahead. Like I said, we will look at commodities, oil, gas, copper, all under pressure. We will give an example of trade we did on the long side for Chevron. So this is a longer term trade. And strong dollar is weighing on gold, and obviously Bitcoin has another terrible week if you haven't heard about it yet. If you're a subscriber, stay tuned. There will be a separate video. We will cover many different stocks. We will also cover some forex instruments, and we are actually already started. We have already started shorting the stocks. So stay tuned. If you're a subscriber, we will be shorting various stocks. I'll show you how to do that. If you're not yet a subscriber, consider signing up by going to the description. There is a link there to my site called Master Charts Trading. Sign up for one of the services. I have trading indicators, newsletters, and some other packages. So check that out. So the indicators are on this chart. You can see those green, blue, red, and yellow lines. This interface is on TradingView. Where I'm hovering, it says tradingview.com. So all you need to do is have a free TradingView account, and once you have a free TradingView account and sign up on my site, Master Charts Trading, send me a message. I will open the door for you, and I will turn off these indicators on your chart. So looking at this chart, this is S&P 500 futures. If you're not blind, I guess you can kind of see where the rally topped out. The rally began right there where I'm hovering on 20th of May of this year, a long distant memory. We had several weeks of moving higher, and then we had short signals. So notice where the signals came in. They came in exactly at the red support resistance line. So this is all I really needed to know. I didn't need to know anything about Federal Reserve. I didn't need to know anything about pretty much anything. The only thing I really needed to know is whether or not the stocks have hit a red support resistance line from below. So for stocks, S&P 500, you can see that the bear market, according to my system, started right there where I'm hovering on 29th of April of this year. So this is a beginning of a downtrend. Now, do we want to sell short immediately at the beginning of a downtrend? Possibly. In fact, if you sold it short right there, you would have made good money here. But that doesn't always happen, and I usually want to have a lower risk. Notice I didn't say low risk. You want to have lower risk, and then that lower risk happens when we have a bounce towards the red support resistance line from 20th of May into late May, early June. We had just that, and finally the stocks unraveled, and I mean they really unraveled. We had 1, 2, 3 extremely strong selling days, 9th of June, 10th of June, and 13th of June. And then we had a small pause and a couple more days of another huge day of selling on the 16th of June. Today, it looks like a potential hammer candlestick, but it's a measly, really very small candlestick. You can barely see it. It's more of a spinning top, if anything, or a doji maybe. So if you are not familiar with the terms I'm saying, You can go to StockCharts.com and click on Chart School and just read about various candlesticks, candlestick analysis. It's helpful. It's not the end, it's not the most important thing out there, but it's good to be able to read candlesticks. So, like, let's say you're playing a musical instrument, you may want to learn how to, read musical notation or at least know the chords. So the same thing goes for when you trade in stocks. It is really helpful to know candlesticks. Now, candlesticks again are not the most important thing in my opinion, but they are helpful. So this is today's candlestick is potential hammer. Maybe we're bottoming, but there's it's really difficult to say. But when we get to junk that, I'll show you that there's a good chance that we're bottoming. Here's Dow Jones. Dow Jones gave very nice signals as well. So again, rally from the lows of May. A trading range right around the red line. I love when that happens. And then immediate and then strong selling. We had 1, 2, 3 days of selling, and then a little bit more sideways action and more selling today, yesterday and today. Again, possible bottoming candlestick right now. But overall, because of the correlations, stocks S&P and Dow Jones move together in lockstep. NASDAQ was under more pressure and earlier. NASDAQ actually began its downtrend back in March with a huge rally and just incredible short signal right there on the 8th of April, and it collapsed afterwards immediately. The lows of May, and then we saw a rally. So this rally actually was not that strong. I was expecting it to continue higher towards the resistance at the red line. It never made it, and we just collapsed into a new lows. So technically speaking, this short signal from 8th of April was never negated, and we were never stopped out. The reason being is because our stop is at the red line. So you can see that we have never touched it since that short signal. Now, we would have taken profits. Where would I take profits? Like right there on 25th of April, maybe on the 4th of May. Another really good place on the 17th of May, another place on the 27th of May. So you can see that like we bounced, we went below the yellow line and came up above it. Below the yellow line, came out above it. So we're gonna most likely bounce again, but we just don't know if we're gonna stop here or we're gonna continue lower before a bounce. So if you opened the short back here on 8th of April, I mean, just congratulations. That's all I can say. The Russell 2000 was signaling weakness even earlier. Notice the beginning of a downtrend for Russell 2000 small caps was in January. This was ages ago. This was half a year ago, literally. And a couple of incredibly good signals, and they're marked by the downward facing arrows. Again, I'm not making it up. I'm just following the lines, really. And you can be doing the same thing. You can simplify your trading. That's what I'm trying to get at. The latest signal from 30th of March and possibly as late as 5th of April was also just incredible. And once again, notice that we did not touch the red line yet, so that means that we are technically still in this trade. I mean, if you opened it on the short side. So again, congratulations if you opened it back in April, April of this year, March, April of this year. So now let's look at junk debt. So junk debt and stocks, generally speaking, move the same direction. Now junk debt and actually Russell 2000 were the first canaries in the coal mine, and notice how big this move down was, just enormous. Now we're at multi-year lows, so I want to go to weekly charts. So what does it mean weekly? Where I'm hovering, it says W, weeks, 1 week. So my indicators, you need to switch them manually. So notice here it says length 250, and that's because I'm on daily charts. Okay, there are 250 days in a year, so I'm on daily charts. So I need to keep them as 250, the indicators. But if you are going to weekly charts, and we're gonna go to junk that JNK, where are you there? There it is. You need to switch the indicators to 52. How do I switch? Hover over the indicators, and you see there's that settings wheel, and then click on that. It says length 52. Just change it. Say OK. So now we're looking at weekly charts of junk that. Notice huge move down. Notice this candle from today, from this week. This is a weekly chart, meaning that this one little thing that I'm hovering over contains 5 days worth of trading. Now, last week we had a big red candle. We made a new low below the May 16th candle, right there where I'm hovering. And then this week we collapsed even lower. However, we can see that the bulls, or people who think that the stock, or in this case junk that will continue higher, actually kind of bought out. In other words, they did not push, the bears were not able to push the prices all the way to the bottom. And on Friday we closed where we opened on Monday, and that's why this candle, which just looks, this is called a doji candlestick, there is really no movement as far as closing of the price. So we had some movement up, we had some movement down, but actually at the end of the week we just closed where we started. So it looks like right now bulls and bears are finally balanced, but the fact that this shadow out of the top is quite long makes me think that we actually have indeed hit a bottom, at least an intermediate one. So looking back, we actually went back all the way to 2000. This is a pandemic, height of the pandemic here, lockdowns. So we are approaching those levels. Are we going to hit those lows? It's possible, but I think a bounce for junk debt, and also by extension for stocks, because junk debt and stocks move together, correlate, we may see a bounce for stocks. Now, will it actually happen? There's only one way to find out, but there is now a good chance that this is going to happen. All right, let's switch gears. Now we're looking at commodities. This is natural gas futures, and this is one of those picture-perfect trades. So alert was sent March 22nd, 2022, this year. Immediately it went in our favor. So where do we take profits? We take profits when the stock closes above the green line and then comes back down. So right there around 19th of April, 20th of April, it's a great place to take profits. So already a nice move. How much profit to take? 25% is a good place to take profits. Another opportunity to take profits was right there, 9th of May, and these are actual alerts to my subscribers. Now we made a new high on the 8th of June, and then several days later, on this day, on 14th of June, we had an enormous candlestick. This was like 15% drop. So at this point, I'm like, something is off. And I actually sent an alert to my subscribers yesterday on 16th of June that I would be exiting this position if I had any. In fact, today we had another big fall, another was at 6% down, and now we're below this blue support resistance line. So we're technically still in an uptrend, but there's pretty strong downward pressure. So I want to see where this goes. Geopolitically, there is stuff going on with Russian gas and Russian oil. Perhaps Russia is becoming more and more irrelevant in the grand scheme of things. This is just what happens when they don't play by the rules, I guess. And the sanctions are working. And overall, the price is coming down, meaning that supply issues are most likely going to be resolved by two mechanisms. One mechanism is increased supply of gas, and it is already happening. I'm hearing from Middle Eastern countries that more gas will be provided to European countries and the world in general. And additionally, because of the increases in interest rates by the Federal Reserve, there is what's called demand destruction going on. In other words, people just can't really afford it. Or rather, let me rephrase it. The demand destruction is a result of higher prices. And now that Federal Reserve is increasing interest rates, it's also contributing to destruction of the demand. So we are seeing exactly that. Prices are coming down for two reasons: more supply and less demand. So good thing, inflation will come under pressure, under more control. Unfortunately, at the same time, stock market is also unraveling. So the demand destruction is across the board. The interest rate tools is quite blunt. So here on natural gas trade, if you were able to get in here in March of this year, then congratulations, and hopefully you are able to get out now to preserve your profits. This is now we're looking at actually at copper. So copper, we also know it's Dr. Copper. So why is it called Dr. Copper? And Dr. Copper means that we need to look to copper to see how is stock market doing. Is it healthy or is it not very healthy? And usually when copper is appreciating, copper was appreciating a while back, it topped out where I'm hovering right there on 7th of March, and then it started trading sideways and actually went down. So for copper, the bear market started right there where I'm hovering, 2nd of May of this year. We can already sell short right there, but an excellent opportunity was after this rally, and it topped out here on 2nd of June. Big, enormous candlestick, and if you are, if you can read the candlesticks, you can short it right there. My thing is I wanted to make sure there is a signal, and signal did come in where I'm hovering on the 10th of June. We actually shorted it. This is an actual signal to my subscribers. This is a nice move. This is like, let me see, 30% I think move. Oh no, actually I'm sorry, about 9.5% or so. So for futures, it's a nice move. Not really a lot of ways to trade copper, but if you are outside the United States, you can trade a CFD, contract for difference on copper. And the symbol for copper CFD, you can, so you go copper CFD, see, and there it is, SCU USD. You can also trade copper contract for difference. For example, you would have shorted it right there on 9th of June. So Dr. Copper is obviously saying that the patient is quite ill. Stock market in this case. Oil also, let's look at oil on weekly first. So again, the weekly time frame. So oil actual alerts, one is on the week of 6th of December, another one on the week of 14th of March. Both of them, successful obviously. Now, we didn't make a new high, and this is what kind of bugs me. If we look on the daily chart too, today was really big fall. So if I got in right there on 4th of May, I would have taken profits like right there, 6th of June, and I would have moved my stop to entry. So most likely I would have been out today. So that's why I wrote here, I would be ready to get out or already out of the trade. Now, the way oil is acting, I am wondering if once again, because of the multiple issues like demand destruction, because of higher prices, because of increase in interest rates, and because of increased supplies, despite what Russia is disrupting, oil will come down in price. So this is what I'm trying to convey here, because I'm looking at other things besides oil, for example, oil-related equities. So let's look at one of those trades. And one of those trades was Chevron. So Chevron Corporation, this is a weekly chart. Each candlestick is a 1 week's worth of activity. So initial breakout was right there. And actually, initial breakout was like in June of 2020, but then you had an excellent opportunity to buy 11th of January 2021, and the latest signals were right there in 19th of July, 23rd of August, and 20th of September 2021. So again, this is a weekly chart. If you're able to get in there, this is a low risk entry. This is what I'm trying to convey here. When you're buying around the blue line, this is a lower risk entry. Notice how much we moved. We moved 81%. And we topped out here on 6th of June of this year, 2022. And this week we had a great fall. So this week we had significant selling. Let me see how much the selling was. So it was 15% worth of selling. And couple that with oil dropping. So Chevron is an oil company, obviously. I would be out of this trade by now. So the signal was there to get out. So what happens, the signal is we had a close below the blue support resistance line today. So what I'm trying to say is there is something going on with the commodities, which we're seeing a depreciation of commodities, again, for various reasons, possibly because of demand destruction, possibly because of supply increase, and possibly because of both. So this is telling me that maybe oil is done as far as appreciating. Maybe we won't go to 150 a barrel. Maybe this is as far as it's gonna go. So let's look at next few weeks, but I have a feeling that we have tapped out as far as oil related are concerned as well. So this is one of the few sectors, energy sector, which still was in an uptrend compared to other sectors of the stock market. Let's look now at the dollar and gold interplay. So this week, once again, the dollar is just seems unstoppable. If you were able to get in on the dollar back here in September, as late as September of last year, you came up with an enormous win, over 13%, and it seems to be just pushing higher. In other words, dollar is so strong versus other currencies that it's they call it the least ugly dog. It's not that the dollar is just beautifully attractive compared to other fiat currencies. No, it's just it's not as bad as other currencies. Okay, dollar is in demand, but it's not because it's good. It's just because it's less bad. I don't know if that makes any sense. So dollar appreciating is pressuring commodities. Gold, say it with me, is a commodity. It's nothing else. It's not a hedge against inflation. It's just a way to you can use it as money in an emergency situation without a doubt, but it's not really a hedge against inflation, because a much better hedge against inflation would be stock market. It's been already proven time and again. So looking at this weekly chart of gold, we can see that we're touching this red support resistance line already several times here. So the latest signal again was on the downside. So I think we're in a bear market for gold. I think that strong dollar is pressuring gold. Why is it pressuring gold? Okay, so this is XAU divided by USD. Notice where I'm hovering. So if the lower part of this equation gets stronger, bigger, it will pull this currency pair lower. So I think this is what's happening. I think that, again, if we close once again below this level, 1825, I'm reading it right out of the chart, this red support resistance line, so bear market below 1825. We already saw a close below that level on the week of 9th of May, but I think if we close again, I think we can easily continue lower towards like August 2021 lows, which is 1670. So we could see significantly more downside if this level is broken. And Bitcoin, this is just weird. I mean, I still get flack for thinking, for bashing Bitcoin. I will continue bashing Bitcoin until it stops being in a downtrend. Until very recently, we were buying Bitcoin. These are actual alerts from August 9th and from 27th of September. But then something happened and we saw a bear market in Bitcoin right there. This is the beginning of a bear market in Bitcoin on the January 3rd of this year. These downward facing arrows are actual alerts. The latest one was just enormous. I mean, look at this. We shorted it at 42,000. It's now at like 19 something, 20,000. That's, that's 52% in our favor. More importantly, notice this kind of like dark purple line that I drew. So this dark purple line was marking the lows from 21st of June of last year. And we broke that support by closing below it, where I'm hovering on June 6th, week of June 6th of this year. And as I was predicting, we collapsed, and we did collapse. So last week, this week is quite a large move down. This was just in 1 week, like 25% move from 26,000 to 20,000. Now, if you're one of those people who think we should be buying the dip, I don't know. I think 7,000 for Bitcoin is an optimistic, or rather, I don't know, optimistic or pessimistic estimate, depending on how you look at it. I think it could go to negative. I think because we have now Bitcoin futures, and we know that the futures can go negative because we had oil go negative at the beginning of the pandemic. So Bitcoin futures could go negative. And think about, what does it mean? That means people will pay somebody to take Bitcoin out of their hands. What do you think? Make a comment. See if what I'm saying makes any sense. And head over to MasterChartsTrading.com. Click on sign up and sign up for one of the services. So once again, I have trading indicators, which are these charts or these lines in the chart. You can see how easy it is to trade using those indicators. You can see downward facing arrows. Those are actual alerts. So you can have them on your TradingView chart. Just sign up. It's $29.95 per month. I think it's a steal. The newsletters, so again, I publish 2 newsletters. You get daily updates on the various stocks we trade. For example, in this case, we're going to cover all of the stocks here, and we get weekly members-only video. I think the best deal, of course, is to get both trading indicators and newsletters at $59.95 per month. And if you need a special, one-on-one sessions, you can do that as well. I do over Zoom, and I'll share my screen with you, and that's $259.95 per month with a 60-minute one-on-one session, and it includes everything that I offer. That's it for this week's recap. Please don't forget to hit the like button. It's truly important to me, and once again, it will increase the distribution of this video, and with your help, more people will actually see this, I think, useful information. Again, thank you for watching, and have another great trading week. Bye-bye.